This summer has seen massive disruption in the fintech space, especially in the fintech lending space. We are going to look what implications that has for the fintech industry, especially in the lending space.
Rohit, what really has been the effect of the pandemic on fintech lending in particular? There's been a lot of news recently. Break it down for us if you could.
The pandemic is having a very intense impact on the industry. We are seeing a lot of consolidation. We have seen players who didn't have either the adequate capital or the adequate risk management, getting out of business or getting sold.
How would you really characterize this moment in fintech lending if you're an observer or an investor in this space?
This is a moment of both pain and opportunity. Pain, obviously, because everybody's business is under stress. The outlook is still pretty uncertain, especially in the business lending space. And also, people are very fearful about how the recovery will really happen. At the same point of time, this is a great opportunity for companies which can look beyond next year, and companies that have the staying power, because the more they can invest right now in perfecting their systems, building better technology, having more outreach to their existing clients and new partners, the more they will gain out of it once the pent-up demand comes back. Our key message to all our key stakeholders, whether there are our employees, partners, affiliates, has been that we are open for business. We are investing a lot of money in our technology, in our processes. We are still hiring people, and we are very circumspect about the current market conditions. At the same point of time, we are very optimistic about the future, and we foresee that this crisis will make us into a stronger company. It will make us into a more battle hardened company, and it will also, the focus that we have put on our risk management and technology is already starting to pay us off handsomely, and this will help us to grow even further, faster and stronger as we come out of the recession.
So let's get into some of the recent headlines that have been cropping up in the fintech lending space. We're hearing news about IPOs. We're hearing news about acquisitions and mergers. Some big players from the Fortune 500 are coming into fintech lending in a bigger way. What's your take on all of the activity that we're seeing right now?
Yeah, so in my view, this is like the level of activity in the fintech space has been just mind-boggling over the last few months. On one side, we have seen very successful IPO of nCino because it's being treated as a technology company, and with all the future of banks moving into cloud, there's a lot of optimism about companies like nCino. We have seen companies like Stripe and even Google making bigger moves in this space now. So obviously there's more mainstreaming of fintech industry starting to happen. More of the tech companies are starting to really move in there. At the other end, we have also seen massive amount of consolidation happening, especially in the fintech lending space with the sale of OnDeck and Cabbage. So I would say it's a massively interesting times right now. And obviously what is happening is that there is a clear distinction between haves and haves nots. And the haves are the one who have the right infrastructure, the right investments and the staying power. And the have nots are the one who didn't have the technology and or the staying power, and also where the risk management was poor.
With all of this happening because of the pandemic, what do you think is really coming next for the fintech lending space? What is the future outcome that we're going to see once we get past this pandemic in this sector that has been shaken up so much in the last couple of months?
Yeah, so the fintech lending space is not going to look same at all. I think it's going to look very different, different players, more stress on technology and data science, more partnerships between fintechs and banks and other, institutional players. There will be actually be a lot of a need for money among small businesses because they have got impacted the most during this recession. At the same point of time, a lot of institutional investors are looking for yield. They're chasing yield, so they will come back into the market. But I think what this is going to do is that, the shine that was there on fintech lending players, and they hadn't actually gone through a recession. And a lot of them have actually got washed away during this recession, and a lot more will get consolidated. So the players who are going to survive are going to be the ones who will be in a very strong position. And at the same point of time, they will also have to work more through partnerships model than just direct acquisition models or just direct lending monoline product model. My take is the fintech lending industry is seeing a mind-boggling amount of change. While everybody expected changes to happen in a recession, this level of consolidation and changes have been very surprising. At the same point of time, the companies which can combine the technology and data analytics to build better customer acquisition channels as well as superior risk management are going to be the big gainers.